What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw the stock market inching higher with the tech sector selling off just a little bit. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY the price action went up 0.22%, closing back above the 5 EMA yet again and still holding on to that strong bull trend. We did have a nice gap up open and got very close to retesting all-time highs intraday, but we did see selling going into the rest of the day and did close down lower. We did close down below that resistance level right around 418.50. However, looking at the price action and the trend, it's still bullish, and even though the market is getting boring and sort of just chopping around and slowly inching up higher, this is still a bull market. So right now the critical levels to watch on SPY are still going to be right around 418, 415, and the 20 simple moving average is now climbed all the way back up to 414. Remember, the 20 simple moving average is that strong momentum support level that we want to watch in all bull markets. So we would need to see SPY start closing below 414 to start reversing this bullish trend. So for now, the price action and the trend still imply that SPY wants to go up higher towards our price targets. Remember, the price targets above are 423 and 426, and we are starting to see the Bollinger Bands start expanding yet again after they were squeezing. So as the Bollinger Bands expand, they will start opening up and allowing SPY to climb up higher towards these price targets. Remember, the longer something goes sideways and it consolidates, the more energy it's building up for a large move. So we are going to get a large move very soon in the stock market, and it's going to be to the upside or the downside, but it will no longer be this sideways price action. So remember that when something's building up energy, it cannot release that energy in a sideways move. It's going to be a big move to the upside or the downside. And I still think with this strong bull trend, the odds are that we are going higher towards these price targets. So we need to watch the price action very closely at these critical levels to see what's going to happen in the coming days. Next up is the triple Qs, and on the triple Qs, we dropped over 0.5% today. And unfortunately, we did close back below that 20 simple moving average right around 338. We also closed below that critical support level right around 337, which does mean that the triple Qs could be retesting 334 as soon as tomorrow. Now note on the triple Qs, the Bollinger Bands are squeezing way more than they are on SPY. This implies that a huge move is coming for the triple Qs, and right now the odds are no longer in the bull's favor because there's still no strong bull trend. We could see the 13 EMA did cross below the 20 today, but the 5 is still trading above the 13. So the bulls really need to start stepping in on the NASDAQ 100 if they're serious about getting up to these price targets above. We do have upside price targets at 343, 345, and 350, but in order for those price targets to be valid, we need to maintain the bullish trend. So the bullish trend is in jeopardy, and we need to see price action closing back above 338 as soon as tomorrow. Now I want to go back in time a little bit here, and I do want to show you that there's other times in the market where we did close below that 20 simple moving average for one day and then did bounce back. So right here, we had a little bit of a close below that 20 simple moving average and bounce back. Here we closed below the 20 simple moving average and bounce back. And then again here we did close below that 20 simple moving average and then did bounce back. So remember, one day below the 20 simple moving average does not set a trend. You really need to see that follow through day. So one closing price below the 20 simple moving average doesn't mean that the triple Qs are done for. It is a warning sign and it's something to pay very close attention to. But here are 3 other examples in the very recent past where the triple Qs closed below the 20 simple moving average, but the 5 EMA never crossed below the 13 EMA. So in all 3 of those scenarios are very similar to what we have today. The 5 EMA is still above the 13 EMA, and we only have one day with the price action below the 20 simple moving average. So we need to see if the triple Qs bulls are going to step in tomorrow and get a price action close back above 338. So 338 is also going to be one of those critical resistance levels that we need to pay attention to. We now have critical support at 334, and if that fails to hold up, we could easily start closing these gaps below at 332. Then we'll have the support at the 50 EMA at 329. And then we have gaps at 325, 321, and 315. Remember, we're not likely going to close the gaps unless we're going into a stock market correction. And I don't think we're quite at a stock market correction just yet because we still do see a lot of strength in SPY. Next up is the Dow Jones, and we see the Dow Jones going up over 0.6% today, closing above the 5 EMA and still holding on to the strong bull trend. The Dow Jones was trying to get to an all-time high today, but did close below resistance at 341.6. Now we do have price targets above at 341.60 and 347, with downside support right at the 5 EMA at 340 and that 20 simple moving average right around 339. So if the Dow Jones starts closing below 339, it could mean the Dow Jones is getting out of this bullish trend and starting to reverse, which would be a warning sign that we need to pay very close attention to. But right now, the price action and the trend on the Dow are still bullish. Next up is the Russell 2000, which closed up about 0.5% today, and we did see the Russell closing below the 5 EMA yet again. However, the bull trend is still intact for the Russell 2000, and we did find resistance right around that 227 level. So right now, the Russell 2000 is still in a bull trend, and the price action is still holding up above the 20 simple moving average. Upside resistance is going to be 227 and 230, and above 230, we have one more level at 234. Downside support is going to be that 20 simple moving average at 224 and the 50 EMA around 221.50. Remember, a close below the 20 simple moving average at 224 would be considered a reversal of the bullish trend. On Arkk, we see that Cathie Wood is still on the struggle bus, and we see Arkk going down 3.2% today. Arkk is now back into a full bear trend with all of the moving averages stacked to the bear side. The price action looks like it wants to try to close that gap at 115, and that's also right where our support trend line is. If these levels do not hold up, Arkk could be going all the way back down to about 110. So we see Arkk is looking bearish with bearish price action and a bearish trend, so we need to see if Arkk can bounce off these support levels, or it could be going into a bear market. Next up is the VIX, and we see the VIX dropping today, closing at 18.3. We did see a Bollinger Band squeeze on the VIX, and it did look like the VIX was trying to fire to the upside, but it really just doesn't have any follow through. That's because the VIX is still on a bear trend and the VIX is still trading below the 50 EMA. So normally when we get a squeeze like this, it doesn't guarantee that we have to fire to the upside. We could still see the VIX bleed out from here, close back below 18.2 and continue to head lower. So we need to watch the VIX very closely, because remember that if it gets into the 20s, that would signal a stock market correction and more volatility in the market. But right now, when the VIX is trading between about 16 and 19, that's going to be normal volatility, and we could still see the market going higher. So watch the VIX very closely, and if it starts closing back below 18.2, that would signal that we're likely going to see new all-time highs. Next up is gold, which we had a very bullish day in gold today, going up over 1.2% and closing back above all the moving averages. Note on gold that we're almost in the full bull trend, and we should have that 20 simple moving average crossing above the 50 EMA as soon as tomorrow. So we'll have a full bull trend, which means gold will be in buy the dip mode, and gold should continue to start heading higher towards our next price target at 1829. So gold's looking very good here, and watch for support right around 1776. Next up is silver, which had a very bullish day today, going up over 3.7%, blasting through that price target right around 2650, and it does look like it'll be in a full bull trend as soon as tomorrow. So silver is also looking really good with a support level right at 2650 and the next price target at 2760. Next up is Bitcoin, which is currently up a little bit over 0.3%, and it does look like Bitcoin is trying to go back into a bull market. All of these moving averages will be stacked to the bull side very soon once that 13 EMA crosses back above the 20 simple moving average. Remember, we got the price action close back above that resistance level at 55,000, and our next resistance level on Bitcoin is up here at 61,000. Bitcoin is very simple to trade right now. Above 55,000, it's bullish, and below 55,000, it's bearish. So as long as Bitcoin is above 55,000, you could take bullish bets on this trade, and you could continue to try to trade Bitcoin to the long side. However, if Bitcoin gets back below 55,000, that would be where you want to get out, because it could be going much lower. It really doesn't get any simpler than that right now, and Bitcoin is at a very good risk-reward ratio, knowing that your risk is defined at a close below 55,000. If Bitcoin goes back into a full bull trend very soon, it could be flirting with all-time highs, but Bitcoin would need to close back above 61,000 before we could go to all-time highs. So 61,000 is the key resistance level, with 55,000 being the key support level. Upside price targets, if we do go back into a bull trend on Bitcoin, are up here at 67,000 and right around 75,000. Next up is Amazon, and we see Amazon getting crushed today, going down 2.33%, and this was the biggest culprit for why the triple Qs were red today. We see the big tech name Amazon getting absolutely destroyed today, but the good news is it's currently still holding up above support right around 3370. That was the breakout trendline resistance levels, which now could be support, and it's also where that positively sloping 20 simple moving average is. So downside support on Amazon is going to be 3370, and a break below that, we could be going back down to the 50 EMA at 3272. Upside resistance is going to be 3442, 3483, and 3598. Next up is Tesla, which is the other reason the triple Qs didn't have a good day today, with Tesla going down 3.46% and closing back below all the moving averages. Tesla is not in a bull trend or a bear trend, and it's still stuck in a consolidation wedge. Downside support levels on Tesla are going to be 670, the support trend line at 660, and then on a breakout below the support, we could be going back down to 618. Upside resistance is going to be 702, 718, and the resistance trendline breakout right around 746. Next up is Apple, which went up 0.82% today and did close right on top of that 20 simple moving average. Apple's in a strong confluence area of support where all of those moving averages are stacking up to be on the same exact point, and Apple is still in a bullish trend. So Apple could be heading higher from here, but we need to watch the critical price action at these levels very closely. The resistance level is going to be 134 and 137, with downside support at 131 and the 50 EMA right at 129. If we break below 129, we could be coming down to close the gap at 128. Also note on Apple that we are getting a Bollinger Band squeeze, which does imply that a big move is coming in the very near future. Next up is the financial sector, which we saw going up 0.5% today, closing well above the 5 EMA and still holding on to the very strong bull trend, which means the financial sector is still looking very bullish. On the industrial sector, we went up over 1% today, closing well above the 5 EMA and still holding on to the strong bull trend, so the industrial sector is still looking very strong and very bullish. On the healthcare sector, we went up over 1.1% today, closing back above the 5 EMA and still holding on to the bull trend. The healthcare sector is also still looking bullish. On the energy sector, we went up a whopping 2.75% today, closing well back above the 5 EMA and still holding on to the bull trend. The energy sector does look like it's going back into a bull market, and that's good news for the S&P 500. So going back to the S&P 500, you can see that all of the sectors were bullish today except for the tech sector. One sector does not define the stock market, and we still see a very bullish stock market across the board. We see the financials, industrials, healthcare, and the energy sector doing very well, while we see the VIX hanging around a very low level, which means low fear. So this does favor the fact that all of this energy building up in the stock market could fire to the upside, and we could see a big move to the upside at brand new all-time highs. But watch the critical support levels very closely, and don't forget to watch the price action. Remember, we're being objective in this market, and we're letting the price action and the trend do all of the talking. When we look at this market, we see bullish price action and bullish trending, so we want to be a bull in this bull market. There will be a time when the market does roll over, and that will be the time to possibly become bearish, but what we're seeing right now does not imply that a bear market is near. We still see bullish trends with bullish price action in all of the sectors, with a little bit of weakness in the tech sector today. Also remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to always help you stay on the right side of the market. I'm also bringing you new trade ideas weekly to help you absolutely crush this market. So if you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. Alright, next up is our trade idea Shopify, and we did see Shopify getting sold off with the tech sell-off today going down over 5%. Shop did close down below 1134, and it does look like it's going to retest that critical support level again at 1098. Remember, below 1098, at some percent close below this support, it will be time to cut Shopify loose for a loss. However, last time we got to that level, we did see a monster rally off of that level, and we did go up over 17%. So it is possible we see another monster rally off of this critical support level yet again, but if we do break down below that level, it will be time to cut it down for a loss. Upside resistance levels are now going to be 1134, 1170, and 1241. Also note that the 50 EMA is right around 1173. So Shopify is still forming higher highs and higher lows, which you can easily see right here that we have a higher high and then a higher low. But if we do break down below this and form a lower low, that is why we want to cut this out for a loss. So pay close attention to Shopify, and if you're not in this trade, one of the best buying opportunities could be coming up right around the corner at 1098. Remember, if you're buying on support, your risk is defined by a percentage of close below that support level, which is the best risk reward you can get in most of these trades. Next up is our trade idea Disney, and we did have a very exciting day on Disney today, and it actually allowed us to take some profits. I did adjust my price targets just a little bit, but we did see Disney going over that 189 level, which did mean that we were able to take profits at the first price target. If I switch this over to a 1 hour chart, you could see that we had a very strong open, and then we were running higher, we got up to 189, and then the selling started. So on this resistance trendline breakout, you can see that we're now testing that breakout level as support, and it is currently holding up. On the 1 hour chart, we do have a bullish trend setting up, and we are holding up above that 20 simple moving average and holding up above the trendline breakout. So Disney still looks good for another possible run up towards that price target at 188 and possibly breaking it and going higher. So going back to the daily chart, you can see we did close just on top of the 50 EMA, and Disney is building up some bullish momentum, and it is consolidating around a strong area of confluence right around 185.50. So that is the best buying opportunity for Disney right now after this breakout for a possible another run at these price targets. Upside price targets are 188, 191, and 193.8. Downside support is going to be 185.50, and a break below that means we could be coming back down to 181.40. Remember, on a close below 181, some percent below that, we're cutting Disney loose for a loss. We do have earnings coming up in a couple of weeks, so we still do have plenty of time left to trade this without any risk of an earnings report. So remember, I'm bringing new trade ideas to you weekly on the Stocks Channel Discord, so if you want more Stocks Channel trade ideas, come check out the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.